Hello everybody. In this video, I'm going to give an update on my portfolio and show you all of my positions. Let's get started. Right now, my portfolio is worth $171,929.74. In the past year, I am up $39,214.62. Year to date for the year 2026, I am down $93,733.13. Today was a very green day. I was up $9,819 during the day, and then after hours I am up $3,123. So up about $13,000 today. Let's go over my positions. For my options, I am selling Google $310 covered calls. These expire April 17. My return, I am down $4,624. Oh, actually, there was a suggestion where instead of going through all my options first, I go kind of one by one based on the company. So let's try and do that this video. So Google, $310 the covered calls, and right now Google is at $321.42. So it is above $310, and if it stays that way till expiration, then my shares of Google will get called away, and then I'll make a bit of profit. I do have 400 shares of Google. As I said, Google right now is above $310, which is my strike price. It's at $321.42. My average cost was $306.59. My total return on my shares is $5,954. So overall, I'll make, a profit even if my shares of Google get called away at expiration. Next up, we got Robinhood. So I have these Robinhood $82 covered calls. These expire April 17. My return, $460. Robinhood is at $72.87, so it's below my strike price. My average cost was $114.30. I have 2,000 shares of Robinhood. My return, I am down $82,881.44 on my shares. Sorry, did I talk about what my return was on my covered calls? My covered calls, my return is $460 so far on my covered calls. Next up, let's go to SoFi. SoFi, I have two options positions. I am selling the SoFi $18.50 covered calls. These expire April 17. My return, $318. I'm also selling the SoFi $15 put. These expire April 17. My return, $567. As for SoFi, the stock, it is at $17.21. My average cost, $5.77. I currently have 5,300 shares, and my return is $60,651.75. Most likely, I don't see this falling below $15 at expiration, so I think my cash secured puts that I'm selling, I think it's gonna expire above $15. So I'm just gonna make my money from this. Yeah, this returned $567 already, and there's still $42 left to go. So overall, probably $600 profit from selling these cash secured puts. As for my covered calls, my $18.50 covered calls, this could go either way. I mean, just today it went up how much? The share price went up 84 cents. So if it happens again and again, it might end up being above $18.50 at expiration. Today is the 13th and these expire on the 17th, so 4 days left to go. Wait, is that right? These expire on the 17th? Oh yeah. Okay, so let's see what happens the next 4 days. But yeah, that one could go either way. If SoFi ends up going above $18.50 at expiration, then I will roll these out to a further expiration dates so that I can keep my shares of SoFi, which I want to do long term. Verizon, this one changed a lot since I first opened it. I'm selling the Verizon $48 puts. These expire April 17. My return, I am down $1,070. Unfortunate. When I first did this, I think Verizon was like above, maybe it was above $50. Hold on, let me check when I opened these. I think at the time, break-even price was $47.47. Okay, this was on March 17th. So what was Verizon on March 17th? March 17th. March 17th, it was like $50.80. So it was above $50 at the time that I actually started selling these cash secure puts on Verizon. However, as you can see, now Verizon has gone down quite a bit. So I sold these cash secure puts with a strike price of 48, which was below the current price of Verizon at the time. But now it's gone from over $50 to only $45.58. So it went from above my strike price to now it's below my strike price. What this means is that if it stays below my strike price at expiration, then I will have to buy shares of Verizon. So I'll own shares of Verizon in my portfolio. I believe 500. Yeah, I sold 5 of them, so 500 shares of Verizon I'll have to end up buying, which is fine. I mean, I've owned Verizon in my portfolio before and sold covered calls against it, so I'm comfortable doing that. And I think that's it for my positions. I already went through my stocks as well. 2,000 shares of Robinhood, 400 shares of Google, and 5,300 shares of SoFi. Everything went up pretty well today, but except for Verizon. Verizon did not go up that much compared to my other positions. Unfortunate. Hopefully this doesn't kill me too much. I mean, Verizon tends to not move that much historically. But yeah, perhaps it's coming down from its highs. We'll see if it goes down below $40. Alright, that's pretty much it for my portfolio updates. I'm happy to be around 172K right now, and hopefully I can keep on recovering as the year goes on. I mean, this year's been pretty crazy, but I'm holding on there. I haven't, sold everything in my portfolio. I have cooled it down a bit in regards to how much margin I'm using. I know that I use a lot more margin than the average person. Actually, I forgot to talk about that. So for my margin, right now my buying power is $195,848.83. I don't know why it shows I have $0 in cash, because I really do have withdrawable cash. Who knows? As for my margin buffer is 27.32%. My margin buffer indicates how close I am to a margin call. The higher my buffer percentage, the lower my risk of getting a margin call. So at 27.32%, I think I'm okay for now. If it goes below 5%, that's when I'll start to worry. As for how much margin I'm using $186,972.26 in margin. My annual interest rate is 4.50%. The daily interest that I am paying is $23.25, and I'm using $1,000 of margin interest free. So yeah, I used to use even more margin than this. I mean, I still have $195,000 of buying power left to go, so I could put that to use if I wanted to. The problem is, if I do use up all my buying power, I run the risk of getting lower margin buffer, and I kind of want that to stay above a certain level so that I feel more comfortable. I've been in a situation before recently where the margin buffer got very, very low, where I got very close to getting a margin call, and part of the reason why that was is because I was using so much margin. If I use a lot of margin and then things go wrong, yeah, I could lose a lot of money. So I'm cooling it down for now. I know this is a lot to some of you guys, you know, using $186,000 of margin. That's a lot for some people. For me, that's way less than what I was using before. So before I had way less than 195,000 left of buying power. So from my perspective, I'm cooling it down a bit in terms of margin usage. All right, that's pretty much it for this video. I hope you guys enjoyed watching me go over my portfolio and my positions. If you guys like this type of content, please make sure to like and subscribe, and I'll keep on making more of these videos. Thank you so much for watching, and I'll see you guys next time. Bye.